is that the more times you play the slot machines, the greater your chance of losing. It is mathematically certain that if you play long enough, you'll lose. It varies depending on the game and depending on the casino, but these are anywhere from 80% to 95% loss rates. Meaning, if you took 1,000 trades, or 1,000 spins, I should say, you would lose, on average, 5 to 20%, right? Most of them are over 90 to make it seem as if it's not that bad, right? It says, and it even puts it on the machine. If you go and look at a slot machine, they legally have to do this. Slot machine, poker machine, whatever. Any gambling machine. It says, this machine has a payout of 97.8%. This machine has an average payout of 90%. This machine has an average payout of 95%. Obviously, the dumb money doesn't understand what that means. That means whatever the difference that is from 100 is how much you will lose over time. That 97.8% means that the house has a 2.2% edge. 95% means the house has a 5% edge. That's how they stay open. That's how the lights are on. That's how there's people working there. That's how the casino gets rich and the people in the casino don't. So, very clear, the longer you play, the more probable it is you're going to lose. So now you know it's negative EV, then what possible reason is there to play? This is the part. This is where you just look at Vegas, look at Monaco, look at any of these places with big casinos. It is literally filled with dumb money. It's the 90%. Because when I frame it the way you're about to hear it, you will never want to play in a casino again. So, you accept that these games are negative expected value. And as a trader, you understand that negative expected value means you will lose over time, yes? That should be enough to make you stop, sure. But, what possible reason is there then to play? If you accept that you cannot make money over time, you can't make money, what possible reason is there to play? The only reason to play is for entertainment, right? There's no other reason. You either play some type of skill game to try and make money, or you play a game for entertainment. That's the only two modalities. And so all those impulses in a trader's brain, or in a gambler's brain, or in anyone who plays any game of chance, it's the entertainment factor. So do you want to pay to be entertained? Do you want to go and give your money to the casino in order to be entertained? Couldn't you find entertainment in other ways if you wanted it? Isn't there an infinite number of ways to entertain yourself without literally handing your money to some billionaire? Right? So, obviously, the dumb money don't know this. They think, oh, but maybe I'll hit it. Maybe I'll strike rich. Maybe I'll strike rich. And guess what? Some people do, but they all give it back. Why? Because the game is edge, and the edge is statistically designed for them to lose long term. It's why they pump oxygen into the casinos. It's why they give you free drinks. It's why they upgrade your room. They give you free food. They will do anything they can. They upgrade winners. People who take 2, 3, 400k massive wins. They'll give them the presidential suite for free. They'll do anything to keep them in the building because they understand probabilities. Now, how does this relate to trading? Well, this is how you start on the path as a trader. Whether you like it or not, when you start, you're a gambler. You have no process. You have negative expected value. And yes, you are trading for entertainment. If you take trades without a plan, if you don't follow a system, if you don't have a money management system, if you don't manage risk, if you don't track your trades, if you don't understand the law of large numbers, you are trading for entertainment. I want you to stop and think about that. You might think you're trading to make money, but if you're not following a process, you are not trading to make money. You think you are, but that's the dumb money trap. I want you to break free of that trap. You are trading for entertainment. Do you want to give all your money to Binance? Do you want to give all your money to Bybit, to the market makers, to the smart money traders? Do you want to give them your money to be entertained? Get angry about it. Get pissed off at the fact that you used to hand your money to those people to entertain your dopamine chasing brain. That's all you were doing. Now, you're blue belts. So you've transcended that. You are beyond that. You are now in the middle quadrant. You are consistent, and you're on the path to consistency. You're now consistent as a person, and you're building yourself into a consistent trader. A consistent trader has a process and trusts it. But there is uncertain expected value, and you're trading to learn. After this, once you get beyond this, you get to the key point where every trader is trying to reach, where you are a winner, where you live your process, you have positive expected value, and you are trading for profit. Now let's reverse back to the consistent section. This is where you are, because I will be very clear with you, this is the hardest part. So you understand that casino games are fixed against you. You understand that the expected value is negative, right? That's easy to understand. That's easy to accept. You can say, yes, Michael, of course. I know. Roulette's fixed against me. Slot machines are fixed against me. Video poker's fixed against me. Cool. I know I can avoid those. Great. But then you'll say, but now that I'm trading, and I haven't done 1,000 live trades, I haven't done 100 live trades, I haven't built profitable systems, I am following a process, but I don't know that I have positive expected value. And this is the point. Right now is the most important part of your trading career, because this is where you have to trust your process. This is where you need to have faith, blind faith, right? You just have to believe, if I do the things that I'm supposed to do, I know that the things I'm supposed to do, follow my process, work hard, be disciplined, build systems, manage money, trade small, scale up slowly. You know all these things are the right thing to do. But the thing is, it's days and weeks and months where you might not make money, you might make a little bit, you might have setbacks. You're going to have all this. It's not a straight road to the top. It's rocky. This is where you have to trust your process. Now, the best way I have found with that is to accept that your best days are ahead of you. Because eventually you will figure it out. If you do the right things for long enough, you'll figure it out. So you have an uncertain expected value here. But instead of focusing on obsessing about, I need to have positive expectancy, I need to be profitable, I need, just focus on the fact that you're no longer a gambler. You don't have negative expected value, you have uncertain expected value. You don't have no process, you have a process. You are no longer trading for entertainment, you are trading to learn. You are absorbed in the market. The market is all you think about. You're obsessed with finding edge. You're obsessed with finding unique ways to express your opinion on the market, to find inconsistencies and inefficiencies that you can exploit, to understand uptrends, downtrends, ranges, to understand the flow of money. It's all encompassing. It's the toughest part by far. This is the hardest part, but these are the hard yards that the dumb money don't walk, or they try to walk them and then they quit. You have to have a vision of the future when you're a winner. When your process is automatic, it's just who you are, it's just part of you. You don't even have to look at your rules, you just do it. When you have positive expected value, because it's been done for months and months and months and years, and you've proven profit, and now you actually can go in every month and say, yes, my target is 10%, 20%, my yearly target is 200%, whatever. Because you've done it. You've proven it. You've grown your account. That will come. But right now, you have to trust in your process. And the best way to do that is to become a good loser. Whenever you trade, it's not the same as whenever you gamble, right? Because even gamblers in the casino who don't understand expected value, even those guys, they still think when they lose, like when they win, they think they're a genius, right? But when they lose, they think, yeah, of course. Like, they don't have the same reaction to losing, right? Think about it. I'm sure if you've ever played slots or roulette or anything, and you lose money, you're like, yeah, well, it's just a bet. But what about when you lose a trade? You get visibly angry. Because I thought that was right. I thought I picked the right direction. My analysis was good. I thought it was going up. I thought it was going. You get so much more frustrated when you lose as a trader because you expect to win. So the way you want to do this is flip that on its head. Don't expect to win. Accept the loss. Just say, look, losing is part of the game. I have to lose to become the winner I want to be. I have to lose to become the winner I want to be. Which you do. You have to. All you can do is take your losses on the chin, and the winners will come. And then over time, you will realize, are there enough winners to make me profitable? If not, I'll tweak and test and I'll keep going. And eventually I will get to a point where my winners make more than my losers. All I focus on is losing in a positive sense, meaning all I focus on is making sure that I don't lose more than I promised myself I would. That's the key part. That's why we dollar trade first. You should really, really, really focus now on your dollar trading. At every single trade, become obsessed with trying to get that as close to $1 of loss as possible. If it's 1.04, say, all right, what did I do? How can I get this down to 1.03, 1.02, 1.01? And if it's 0.95, you lose 95 cents, say, right, how can I optimize this so that I lose $1? Because that means I can take better size and make more if I'm right. You want to dial it in as close to $1 or whatever risk you're trading with. If you're trading with a fixed position size because of sizing problems with the exchange, calculate before your trade how much your loss would be, whether it's $2.35, whatever. And then be really ruthless about checking that when the trade ends, seeing what the dispersion was, and really focusing on your losses. I am going to take this trade, but I am going to put a maximum of $1 of risk on it. And then as you scale up and you trade later, it'll be the same thing. Once you've got a 10K portfolio and you're trading $100, you say, my only goal today with this trade is to lose a maximum of $100. That is my goal. And if you intensely focus on managing the risk, just think about it and say, I have 10K. I do not want to go down more than 100. At the end of today, I want to have 9,900 or more. I do not want to have 9,875. That will piss me off. I promise myself today I will have 9,900 or more. That will truly revolutionize your approach to trading. And you will understand that it's not negative in any way because the winners will still come. And you will never get angry at yourself about losing because you've already accepted this was the risk. I got my reward or I didn't. If you go into any other walk of life, if you start a business, if you buy a car, if you buy a house, if you buy a TV, you accept that you're going to give money away, right? If you've got $10,000 and you want to buy a new car and the car is 6,000 and you go out and you buy it, you don't get angry that you only have 4,000 left, right? You made a conscious decision. You went out that morning, you said, I am going to come home with $4,000 and a car. Yes? Trading's the same. Go in that day, if there's a trade setup, and say, okay, cool, I've got 10,000, my maximum risk's 100. Whatever happens today, I'm coming home with 9,900 or more. Focus intently on losing. Keep it positive, keep it constructive, keep it professional. And that's going to take you forward to revolutionize your mind, your approach to being the best loser you can be. GM, this lesson is going to cover some of the frequently asked questions from new blue belts. Hopefully it will help guide you along the way. So, at the beginning of Blue Belt, in the proof of work and overview section, Bitcoin. You can wake up every morning and say, GM. 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 GM, 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 GM. It is Wednesday. It's not just any Wednesday, though. It's everybody's favorite Wednesday. FOMC day. Fed meeting incoming. Powell, purple ties. How many meetings are left with Powell at the helm? But today's one, which I will be live for. We will be live streaming that. That is going to be at 7 p.m. UTC. So, the first thing, Wipeout Wednesday will be earlier, and then the FOMC stream will be later. So it'll be probably 6:45. We were live just before the announcement. So instead of the 5 p.m. Ask Michael stream, it'll be 6:45 p.m. Call it 7 p.m. And then I'll do Wipeout Wednesday at 5. So we'll do that early, so you know. All right, now. Here's this FOMC preview. Will Trump nail Powell's replacement? They've been watching Beyond Bitcoin. I also think that. But what are the odds saying? It's just such a Trump thing to do. See, the odds haven't moved enough. When he's about to announce it, you'll see this go to, high 90s. This Rick Raider is the front runner. It does seem like he'll be getting it. But if Trump announcing it was imminent, you would see this move. You would see, obviously it would spike to the 90s as word gets out. A little bit of insider trading, classic. Who will Trump nominate? Jerome Powell, 14.5 million in volume. Well, that's a funny one. So today, Fed meeting. Then the next one's in March. And then there's one in April. And then the next one will be till June. So there's 2 more after this. So today is Powell's Third last. This one, March, April. Then he's out. His term ends in May. He will serve his full term. I don't think he'll get fired. They're investigating the Fed for their $2 billion renovation or whatever it was. It's kind of funny, like, because obviously all this stuff just gets politicized, and they're like, oh, you know, on one side you're like, Trump's attacking the integrity and the independence of the Federal Reserve by investigating them for fraud. Whenever it's like 2.5 billion or something to renovate buildings, and you work in construction. 2.5 billion to renovate buildings. Yeah. The math isn't mathing. So, also 4 of 11. Again, this is where you need to be like non-political. You need to be apolitical. In trading, politics is not. You don't want to have biases based on politics. You keep your own personal politics out of it, because 4 of 11. I don't know if it's of the. I think it's in the past. I'm not sure exactly how many years, but 4 out of 11 Fed governors, Fed board members, were removed for insider trading. Yeah, so it's not exactly squeaky clean. But it's funny when people online just can't do anything but hate on Trump. They will say this is like a unjustified attack on Powell. It's like, well, I mean, if there is fraud, wouldn't it be good to expose it and uncover it? But it's also convenient because Trump definitely hates Powell and Powell hates Trump, and they're fighting each other and he wants to get his guy in. So it's all, you know, it's all noise and it's a sideshow. And I've given it more attention than it deserves because price is more important. So what's price doing? Price is in the area where basically today's close is what matters for the near term, as we're close to a daily reclaim of the structure from Friday. So that'll be on today's close. It would at least put in a higher low, not a higher low, it would put in a high above the prior lower high. So it'll be the first part of it. Market structure break reversal from the 100. The 100 EMA, which seems to not want to break. We'll see what today goes like though. A lot of this move on Bitcoin is correlation driven, I would imagine. Firstly, fails to break down, so you've got rolling off of positions there from Saturday and Sunday. We've retraced that Monday, Tuesday. The positioning still built up, so there's room, if it's going to be a short squeeze continuation, there's definitely more room for that to run. Because if you just look at the positioning that has been building, what I've been talking about beyond Bitcoin and across the last number of weeks is about when positioning builds and unwinds, does it unwind into a lower high? Right, so you see all this positioning build up, see all this positioning build up, shorts accumulating, shorts pushing it lower from 103. And then when that all rolls off, so the shorts have closed out, it's back to essentially neutral positioning, price is only at 91. So that's a clear sign of sellers in control. That started building at right around where we are now. It really started building up again. Well, the main level it built from was here, and that fully retraced. So the first part that matters is this. This was a move from about 93, 94, and sharp increase as we drop. So big accumulation of shorts. Obviously, open interest is longs and shorts, but it's direction shorts pushing it. The longs are having to absorb it, and the longs are on the wrong side of it. But then as that rolls off all the way back, it puts us to 91. So lower high. So the forcing it lower through heavy positioning in the futures market. Then that rolls off, and the spot supply caps the market at a lower high, indicates sellers in control. We go again, exact same playbook. Price pushes down to a new low, open interest rises. So that build comes from right where we are, sort of 90 to 91, and that hasn't rolled off. And so we haven't gone back to where that positioning build up began, and we are up around that area, which means there's still room. And this it is mean reverting. The nature of the open interest at the moment is that it's not showing any signs of persistent build. Since the 10th of October, it has been reverting in nature. So positions will build, they'll roll off. They'll build and they'll roll off. It's not a steady build of positioning or a steady wipe of positioning like you'd have seen in some of these other market environments. Like, I don't think it goes back far enough, but when we actually have clear trending conditions. So in this consolidation market we're seeing, I expect open interest to keep coming back to where it begins from until that stops being the case. And we have one push which came up. We got back as low as 348 from there to there. So positioning build off of this was Sunday. On Sunday, we started to see it really ramp up in this cluster here, and by the time it rolled off on Monday into Tuesday, we came back to the same level. So more like equal highs than a lower high, indicating a bit of strength. We've pushed further. Coming back then and holding the yearly open, another good sign for the short-term upside. I mentioned it on, was it yesterday's? I don't know if it was this video or if it was on the live stream, but I mentioned that other path. Maybe it was on the trade of the day yesterday, but if you remember last week, I laid out the long path for BTC, which I haven't taken. I'm in the short that I've been in, and I explained all that yesterday. But there was the long path, which was on I know it was on a Coinbase chart. I'm not going to find it here. Too many charts, so many charts. Yeah, here. No, that's not it. Is it? No. But it was from yesterday, and I'll not wait around trying to find it unless it's on the setups chart. Should be here actually. It's in setups only. No, it's not that one. All right. You've seen it anyway. It was roughly this. Let's go over here. And I think it was on a 4 hour I was showing it. It was drawn from back the previous week. You can see it come down, reclaim, and then push up to the upside and into some of these untested areas. So far we're tracking along well with that. So I think if the market doesn't fail here, and it has reclaimed the 4 hour 50 EMA on a closed basis, band's now green. So if it's able to keep pushing, I'd expect it to go beyond the wick of last week, Friday, and probably up towards resistance above. And if this is just squeezing out or positioning getting squeezed up into the FOMC, it all depends really how markets react around the Fed meeting. But I think more importantly today, it's the tech earnings for Tesla, Meta, and Microsoft. They're all reporting at after the close. So that'll be coming after Powell's speech, after New York close, and that's having an effect on the Nasdaq, which is NQ is currently leading. And there's obviously that correlation of Bitcoin and equities. That risk-on bid does flow through into BTC at times, which seems to be driving part of this move. Also, partially it's just held at a prior low, reclaimed, and there's room for it to move above. So that's why I refer back to these prior paths. I'm just looking to see to the upside would still be this, the reclaim. So reclaiming the 50-day, wherever that ends up coming in, which right now is here. It'll be reclaiming that 50-day and staying above it and getting it sloping upwards, just like it was previously over here. We'll try to reclaim it, got above it, lost it. If we can reclaim once more, start to look at it pushing in towards 97, towards the 50-week, which is the bigger level to reclaim for Bitcoin to have a rally into the hundreds. And that's what I'll be looking at today. I think today's close is going to be a big indication as to that directional move. And the other thing, which still is the main view, I'll cover the short trade. I can get rid of these paths now, although this path is pretty much what we've seen kind of sideways. But in terms of the short trade I'm in, whether that gets stopped out or not is secondary. Maybe it will, it probably will. It's pretty close to it. It's going to get invalidated potentially. But that wouldn't change. That's one trade. What I'm still watching is obviously 50-day sloping down, 50-week sloping down, and price still below those. So that's why for me, longs-wise, it would have to reclaim. You actually have to get above 92, 93, even into the 94 area, and then either hold it or consolidate above it. That's when you start looking at this move as really having a shot at breaking out to the upside. Because overall it is still consolidation, as we've been in for nearly 9 weeks now. And but anything else, I wouldn't be, outside of this current trade, I wouldn't be looking to short Bitcoin again, unless it was rejecting below the 50, starting to move back towards the inside week, mid-range, back below the yearly open. Otherwise, it's in this area where prices previously stuck around and chopped. And getting above 90, getting above 90.5 starts to put Bitcoin back into a place where a bit of momentum can build through the upper end towards the upper high of the inside week. And that's what I'll be watching for BTC today. Outside of that, I'm looking at Trades, will cover that separately. Where's the main charts? Yeah, we get these separate side by side. And so ES and NQ overnight, both rising. Since the close last night, 26.1, we're up now to 26.3. And for ES, up from 70.10 to 70.20, 25. So tech leading in anticipation of earnings. It really all hinges now on not so much the earnings themselves as the reaction to it. The reaction to earnings is going to be the big thing. How does the market react to the, because you got three separate, Tesla, Meta, and Microsoft. I keep trying to be sure because Apple's tomorrow. Right, so you've got the four of them this week. This year, Tesla, Microsoft, Meta, but Apple's tomorrow. So four of the old Mag 7 are all reporting this week. And that's where we're at now with this phase that we're in. Tech-wise, the mega caps, the large caps, they have not contributed to the upside for months. So if you look at the broad index, like the S&P overall, is at new highs as we speak. Let's look at the SPY and look at it on a close basis. It's right up at new highs, having had a reclaim from the sell-off of the Trump, Greenland, World Economic Forum week, all that. So that dip got bought. But from here, for there to be actual continuation, bulls need to really follow through. And I would say buy it up beyond 700, hold it, and then start to see it actually trend above the highs. Because previously, we've done this since October, where pushes up have reached highs but not held them. So you got the October move and then a sell-off into November. You got a push back up into December, which double topped and then reversed. You then got a breakout attempt later in December, which failed. You got the breakout start of the year, which failed. So for there to be a new leg and for it to extend onwards, to get the nice broad market rising where it's really risk on, you want to see it break out and hold and stay in an upwards trending, upward sloping fashion above the highs, like actually mark up. I think today is going to be a big signal for that. We've been rising off the lows since last week, Tuesday, just over a week now, and a lot of this movement is going to come post close. So the movement during the session, big day. You've got Fed meeting, always a catalyst, always potential for volatility around that. No cut coming, so there's not going to be a surprise cut or anything like that. But Powell's speech will have clues and questions and everything else.
I don't think I'm gonna run today. I think I'm just gonna lift
really,
weights.
it all comes down to post close.
Because I don't know, I've been exhausted.
And so in this last few months, the leader has not been tech, which
I earned 15K so far.
Was driving the market.
5K in the past Sunday, Monday,
and since
Monday,
tech stopped
Tuesday,
leading,
3 days.
The market has slowed, got more choppy, and you've seen lower caps.
It's gonna lift weights.
IWR, some of the sectors like defense, energy in particular, doing really well. So rotations. But rotations come, when the large caps, when the mega caps stall and the laggards rotate and catch up, that is often the sign of a top, right? So that can be the sign of a local top where you see a deeper correction. Or, as we've seen here, maybe it's a case that tech has cooled off for a few months. The S&P, the broad index, is also mostly consolidated, not really broken out, while other things have gone, much higher. You've had some of the other sectors going significantly higher. So you've had, at the same time, clear breakouts on IWR, on IWM, on defense, massive, on industrials, also energy. They've all been leading, they've all been running. At the same time, you've seen things like software much weaker, which obviously contributes.
Yeah, I gotta switch.
Tech overall. So since the catalyst now is, does big tech allow another push and another phase in this bull trend to occur right now, or is it going to be delayed? Q1 is typically a time for early gains, but you can often give those gains back. Right? You can start the year strong, and then you can find yourself losing or giving up those gains if it is more reverting in nature rather than trending. And that's something that will be
you want to be on the lookout for some of these leaders. Right? Let's say, for example, energy. Right, so energy is the big theme. Obviously, everyone's talking about it. I did a long talk about it yesterday on Daily Levels. It's clear energy is an actual structural trend. This is a shift. This is not a flash in the pan. This is going to be the next decade. It's all energy, nuclear, solar, wind, fucking oil, gas, everything, of course. And then all the companies related to that. And you've got ExxonMobil breaking out of multi-year base. But in terms of thinking like a trader, and in the near term, since the start of the year, energy's ripped higher. So anybody in energy or energy names will be printing over the past few weeks while the buying cues have lagged. And if it doesn't continue immediately, you could just see it revert throughout Q1. Right? So you could see it come all the way back, not be bearish in any way, but you would give up your gains of the early year push and then fall back inside. And even if it goes later higher, it's more of a trickier market conditions trading wise if you don't see the broad market participate, which is where I think it's so important. The Qs, which you can see on the pre-market, is set to open at new all-time highs. And then with the earnings today, does that hold or reject? It's going to be first test of highs. So first breakout attempt is happening as we speak, pre-market. And obviously when the market opens, that's what really matters. So does the first breakout attempt on Qs stick? If it does, it's the same as what you see on SPY. You want to see it hold above. You want to see his bands catch up, and you want to see it trend higher, move higher, and stay higher. And if that first breakout attempt fails, then you're looking for it to pull back, or consolidation, and then go again later, or possibly have a deeper correction. I don't see anything majorly bearish here. I would say like dip first being possible. Beneath it all, the bull case for equities, and just for everything really, is still in play. There's not really much that's a major risk factor at the moment. Positioning wise, it doesn't seem like there's too much long positioning or any signs of real euphoria. There's still a lot of fear in the market. There's a lot of disbelief broadly. Crypto obviously is down and starting to come off the lows, and general bad sentiment. But even in stocks, because it's a lot of the big names haven't been moving, like the ones that are going to report today. Meta has been really weak for months, so that's going to have a full reset of positioning.
Okay, guys, I'm gonna end the stream. I gotta do some back testing,
given that the
and do some work, and then go to the gym, and then go to work. So